Is Palantir the next Tesla or the next dot-com bubble waiting to burst? I have a complete institutional equity research report here that suggests it's both, a generational company trading at a generational price. Today, we aren't just guessing. We are tearing apart the moat, the growth, and the valuation to see if buying Palantir right now is brilliance or financial suicide. Let's dive in. Let's start with reality. Forget the marketing hype. What does reality look like inside a Fortune 500 company today? It looks like this. It's chaos, absolute data chaos. We call these data silos. You have critical data trapped in SAP, customer data in Salesforce, logistics data in Excel. None of it speaks the same language. Now, imagine trying to layer AI on top of that mess. It doesn't work. This is why 80% of AI pilots fail. They don't have the fuel. This is the problem Palantir solves. They don't just give you a chatbot. They come in and fix the plumbing. This slide right here, this is the moat. Palantir is not a database. It is an operating system for the modern enterprise. They build what they call an ontology, a digital twin of your entire business. You have three core engines. First, Gotham. That's the scary stuff the military uses. Second, Foundry. That's the commercial engine for companies like Airbus. And now, AIP, the artificial intelligence platform. This is the rocket fuel behind the stock rally. AIP allows large language models to actually do things, not just write poems, but reroute supply chains or predict machinery failure. Look at the right side. AI-driven action. That is the keyword. Palantir closes the loop between data and decision. Now bears say, Microsoft can do this. Google can do this. Can they? Palantir was founded in 2003, funded by the CIA. Their software has IL-6 security clearance. That means the US government trusts it with national security secrets. You don't build that level of trust over a weekend hackathon. This is a moat that is 20 years deep. It is built on paranoia and extreme security. This stickiness is something the market is right to pay a premium for. And finally, the commercial market has woken up. Look at the US commercial revenue. Up 52% year over year. That is hypergrowth. But look deeper. Look at the total contract value, up 121%. That tells me CEOs aren't just testing the waters, they are panic buying. They are signing massive checks because they realize they need this infrastructure to survive. In the US enterprise market, Palantir is absolutely crushing it. Let's look under the hood. In software, we use the rule of 40, growth rate plus profit margin. Over 40 is elite. Palantir, their score is 114%. 114%. They are growing at 63% while maintaining a 51% margin. Usually you choose growth or profit. Palantir gives you both. It is a financial anomaly. It is one of the most efficient software businesses I have ever analyzed. And the balance sheet? A fortress. $6.4 billion in cash. Zero debt. They have infinite optionality. They can acquire competitors, weather a recession, or invest in R&D without borrowing a dime. So, 9 out of 10 business quality? No, this is a 10 out of 10. So, we have established that this is a phenomenal company. But here's the problem. A great company is not always a great stock. And right now, Palantir is the textbook definition of that disconnect. Look at this chart. This is where the dream meets reality. Palantir is trading at 82 times forward sales, not earnings. Sales. Peers like Datadog or Snowflake trade at 13 to 18 times sales. The market is pricing Palantir at a 500% premium to its closest competitors. The market says $1 of Palantir revenue is worth 6 times more than $1 of Datadog revenue. Does that sound rational, or does that sound like euphoria? Let's translate that multiple into dollars. To justify today's price, Palantir needs to grow revenue to over $50 billion. They are at $4 billion today. They need to 10 times the business. Essentially creating a new sales force from scratch in record time without stumbling once. Is it priced as if it's a guarantee? Absolutely. At this price, you are paying for perfection. If they miss earnings by a single cent, look out below. We ran the discounted cash flow model. Even in our optimistic base case, assuming they dominate AI, our fair value is $90 per share. The stock is near $180. You're paying $2 for every $1 of value. That is not investing. That is speculation. There is a 90% statistical probability you will lose money buying at these levels over the next 3 years. The only scenario where you win, our AI dominance case, requires everything to go right. That's a 10% shot. Do you really want to bet your life savings on a 10% shot? Remember Cisco in 2000? Great company, real profits, but it traded at 100 times earnings. When the bubble burst, it fell 80%. It took 15 years to recover. Palantir risks multiple compression. The company grows, but if the market decides it's only worth 40 times sales instead of 80 times, the stock price gets cut in half. So the verdict? Palantir is a 9 out of 10 business married to a 2 out of 10 stock price. The moat is real, the tech is real, but the price is fantasy. Our rating is a sell. If you held from $20, congrats. Take some profit. If you are thinking of buying, wait. The market is a pendulum. It will swing back. We are looking for an entry between $50 and $70. That is where investors buy. Right now, it's just gamblers. Am I missing something? Is Alex Karp a wizard who deserves this valuation? Let me know in the comments. Full report link is below. Like and subscribe for more honest analysis. Trade safe.